Hello, today we'll be talking about BNP Paribas. BNP Paribas is one of the largest banking groups in Europe and a global leader in financial services. It was created in 2000 after the merger of two major French institutions, Banque Nationale de Paris and Paribas. Um, Today, BNP Paribas operates in more than 65 countries and serves around 150 million clients worldwide. It is known for its strong position in retail banking, corporate and institutional banking, asset management, and insurance. Now we'll go through BNP's main strategies. So first, you have Grow in Europe. They focus on being the number one banking partner across the EU, strengthening positions in France, Belgium, Italy, and the Mediterranean region. Next, you have digital transformation. They invest heavily in digital banking, fintech, partnerships, and automation to improve customer experience and reduce operating costs. Then we have diversification of revenue, which is which includes retail banking, CIB for markets and corporate financing, and investment and protection services, which is like asset management, insurance, and wealth management. And lastly, we have sustainability and ESG leadership, which had a major shift toward financing renewable energy and green projects so they can align with the EU green transition and sustainable finance regulations. Now, for geographic segments, we have domestic markets where it has the strongest retail presence. In France, we have BNP Paribas Retail Banking. In Belgium, we have BNP Paribas Fortier. In Italy, BNL, which is Banca Nazionale del Lavoro, and then Luxembourg, which is BGL, BNP Paribas. Then we have international retail banking. We have in Morocco, Algeria, and Turkey, and in Poland. In United States through Bank of the West, which was sold in 2023, and in Africa. And you have corporate and institutional banking operating globally, like in Europe, America, and Asia, including investment banking, global markets, securities, services, and corporate lending advisory. This image shows BNP Paribas' main subsidiaries across retail banking, insurance, asset management, leasing, digital banking, and consumer credit. The variety of brands illustrates the group's diversified revenue model.
So let's start with the business itself. BNP is a universal bank, meaning it offers a huge range of services. They keep their businesses secure by dividing it into three strong parts. First, commercial and personal banking. This is the everyday bank. It handles local banking for people and small businesses across countries like France, Belgium, Italy. This part gives the bank the most stable income base. Next is the corporate and institutional banking. These are large scale investment operations. They work directly with the world's biggest companies, dealing with things like mergers and global market trading. Finally, the investment and protection services, which focuses more on future. This includes managing wealth and providing insurance. So, overall, this balanced approach means that when one area slows down in the business, the other keep the whole company steady. So now we take a look at who owns the bank. The chart clearly shows that over 70% of BNP is controlled by large institutional investors. We can break this down to European institutional investors holding roughly 39.4%, non-European institutional investors holding about 31%, individual shareholders accounting for around 7.2%, giving us a strong retail base. We must highlight the key strategic holders. The biggest, largest investor is BlackRock Inc., with approximately 6.1%. Right below it is the Belgian sovereign fund, the SFPI, holding nearly 5.7%, and then the French asset manager Amundi holding 5%. Because these major funds own so much of the bank, it means they are focused on stability and long-term results rather than just quick profits. Finally, let's take a look at the price performance over the past 5 years, comparing BNP in green against Societe Generale in yellow and Crédit Agricole in blue. The chart clearly shows that BNP is the most valuable, but the first thing you notice is the clear difference in market value. Even during the pandemic in 2020, BNP's closing price was 43.1 euros per share, far above Crédit Agricole at 10.3 euros. Also look closely at the yellow line for Societe Generale. It saw low for years, but it saw a huge and sudden jump in 2025. This dramatic rise, up to 59.5 euros per share, is due to the bank successfully cutting costs and selling non-essential assets. However, BNP remains the highest valued. It has climbed continuously due to its size and its ability to maximize profits from the recent rise in European interest rates. Currently, BNP sits at 72.34 euros per share. This confirms that despite a competitor's excellent turnaround, investors still see BNP as the most stable and resilient choice in the French banking market.
Now, let's look at the financial results. We're focusing on the last two full years, 2024 and 2023. The story here is one of a strong and improving profitability. While revenues saw a healthy increase, the most impressive performance is in the gross operating margin income, which grew by nearly 25%. Why is this important? Because it tells us the bank isn't just generating more income, it's also managing its operating expenses effectively, leading to a greater operational efficiency and more profit falling to the bottom line. This directly feeds into the net income, which increased to over 11.6 billion in 2024. This robust and growing net income is the pool from which the 50% dividend is paid. It demonstrates that the shareholder returns are well supported by genuine earning power. BNP Paribas returns value to its shareholders through their dividend policy. As you can see from the chart, the bank has demonstrated a clear and consistent commitment to growing its dividend over the past 5 years. The dividend per share has increased from 1.5 in 2014 to 4.79 for 2024. Now, it's important to address the jump from 2020 to 2021. This wasn't just a random increase. In 2020, like many European banks, BNP Paribas followed the European Central Bank's recommendation to limit payouts during the peak of the COVID-19 pandemic to preserve capital. The subsequent rise represents a return to a normalized distribution policy. The foundation of this reliable growth is a formal policy. BNP Paribas aims to distribute 50% of its net income as dividends. This provides shareholders with a predictable and transparent framework for expected returns. To conclude my section, the analysis of BNP Paribas' dividend and financials paints a compelling picture for potential investors. First, you have a predictable and growing income stream. The 50% payout policy creates transparency, and the 10-year trend shows a management team dedicated to returning capital. First, this income is not a hollow promise. It is fundamentally backed by a strong and improving business. The surge in gross operating income shows that this profitability is based on efficient operations. Therefore, the third and most important point is sustainability, as investors can be confident that the dividend is built on a solid foundation of earnings, making BNP Paribas a potentially stable and rewarding investment. Thank you.
Now onto debt rating, which refers to the external evaluation of a bank's ability to repay its financial obligations. According to the 2024 BNP Financial Report, BNP currently holds high to upper medium grade ratings, which are A1 from Moody's, A plus from S&P, and AA minus from Fitch, which reflects a strong stable credit profile, but not the very top tier of ratings. This level is completely normal for large European banks such as Santander, Deutsche Bank, and Crédit Agricole, which are all rated in a very similar range. Large global banks almost never achieve higher ratings than this because of their diversified market exposed business models, which naturally involve higher risk. Therefore, BNP's rankings accurately reflect its position as a solid, reliable, low risk European bank. Now on to return on equity, ROE, and return on assets, ROA, which are two ratios that show how efficiently a bank generates profit. A higher ratio indicates better performance. To interpret BNP Paribas' results, we have a comparison with another major French bank operating under the same regulatory and economic environment, which is Societe Generale. The following numbers and graphs are taken from macro trends and verified with the bank's financial statements. So we start by noticing that BNP's ROE is 8.54%, which is higher than Societe Generale's 4.68%. Similarly, BNP's ROA is 0.41%, which is also significantly higher than Societe Generale's ROA, which is 0.23%. Not only do we notice that BNP has higher ratios, but it also has smoother and more stable profitability trends over time, as opposed to Societe Generale's more volatile ratios. This is due to the fact that BNP benefits from a broader European and international footprint and a more balanced split between retail banking, corporate banking, and investment banking, which allows it to have stable ratios, with the exception of the 2014-2015 dip that we see in both ratios, which was due to a major one-off US settlement that BNP recorded. Now, a final observation is that in the graphs, each bank's ROE and ROA curves follow the same exact pattern, as we can see here, which is because both ratios are driven by the bank's net income, so they almost always move in the same direction. Now, finally, onto capital ratios, which measure how much financial cushion a bank has to absorb losses. And the higher the capital ratio, the safer and more resilient the bank is. Regulators set a minimum level that banks must meet. For BNP, the CET1 minimum requirement is around 9.8%. BNP's actual CET1 ratio is about 12.9%, which means the bank holds significantly more capital than required. In addition, their total capital ratio was 17.1% at the end of 2024, which is also significantly higher than the effective regulatory minimum for the total capital ratio, which generally ranges from about 10.5% to 12% once buffers are included. One reason BNP is able to maintain these strong ratios is the restructuring it carried out in recent years. So, for example, the sale of Bank West freed up a significant amount of risk weighted assets, boosting the CET1 ratio. In addition, BNP's diversified European and global activities help balance risk across its portfolio, limiting the capital strain that more concentrated banks often face. All of this financial data that was explained reinforces BNP's position as a well capitalized institution with solid financial resilience within the European regulatory framework. Thank you. Now, on to